We got another tax question on hold here. Let's get that before the break. Welcome to Talkin Money, Lon. How you doing?
Doing well, thank you for taking my call.
You're welcome. What's happening?
Well, the situation is, when everybody was buying properties like mad and getting in line to buy them, we were one of those. We put up $25,000 down on a $220,000 condo in the Thomas.
Okay.
And we got it. We were lucky enough to get it. And my son was living in it. It was for him, actually. And he works for the state and went through the furlough things going on and couldn't afford it anymore. So he quit making the payments on it. He was passing along to us, and we'd pass along to the bank. His credit wasn't good at the time. That's why my wife and I were involved in it. So it's just our name on that, which is not the smartest thing to have done. But in any case, it went through foreclosure. First Horizon foreclosed on it in April of last year. And shortly thereafter, we got a notice from North Star Mortgage that they were billing us for the whole amount, and why I don't know, because it's been foreclosed upon. And then now we've received a 1099A, and that 1099A came from, and I'm talking too fast on this, but came from MetLife Home Loans.
Which is First Horizon, same group, okay.
Same group, okay, good. And that 1099A says $198,000 balance due, and Box 5 was checked that we were personally responsible for the repayment of the debt. So I was curious. Our attorney, I'd gone to an attorney on it because I was scared that living daylights out of me that I owed big taxes on this. But anyway, his statement was that since it was a purchase money loan, we never refinanced it. And as a result of that, we shouldn't owe taxes for relief of debt on that property. And then, subsequently, we've received now a 1099-C from North Star Mortgage. How they're affiliated with First Horizon and MetLife, I don't know. But in any case, it shows Box 5 check that we were personally responsible for the loan. And
did you have two mortgages on, or a first and a second, or just the first?
No, just first for the whole 5 years that my son was living in the place.
Okay, all right. So Donna, I'm getting an ice cream headache with all these different ACs, and so First Horizon and MetLife bought First Horizon, so that's the same company. I get that.
Okay, good. Well,
now, how this North Star Mortgage? I have no idea who they are. Does that make any sense to you, Don?
The mortgage companies don't come into impact for me when I'm looking at but Lon has a lot of different complications, as most of the people who come to me do. It's never a simple, straightforward. So he bought it not as a personal residence.
Non-owner.
Non-owner. So there's your first quirk or situation. When you buy your personal residence and you default or you go into foreclosure, the California law says they cannot come after you.
Right.
Well,
on a purchase money transaction.
Right. But because he purchased it as a rental, technically I believe the bank may, depending on the loan, you have to look at the loan, but the bank may have the right to come after him, which sounds like what they tried to do in the beginning. Once they issued the 1099A, that's abandonment of property or foreclosure, then that is when the transaction, when you can say that was when the transfer of the property happened back to the bank, which means they're not coming after you for the money anymore. But now you have debt forgiveness. So now you have to look at the part that we were talking about earlier, his debt forgiveness for not paying back that loan and how much of it is going to be taxable. He may qualify under one of the 5 exclusions, probably the 4th one, the business property, where he may qualify where he will not have to take it into taxable income, but now he has to reduce the basis in that $220,000 property.
So the capital gain.
And so he may have capital gain. Also, if he did treat it as a rental, even though it was to his son, if it was fair market rental and he depreciated it, he could have other income from recapturing that depreciation. So he has a lot of moving parts.
So he didn't depreciate it or anything.
Okay, so he didn't take depreciate. That's good. So when a bank issues you a 1099A, are you saying that's their way of saying we're not coming after you, we're just going to hit you for the income?
Well, typically yes, but I will say that most banks do not accurately report the 1099A or the 1099C.
And so what does the 1099C mean?
That's the cancellation of debt. And also the banks are only supposed to issue one or the other, generally not both, but maybe because there was a transfer of money between the banks or just because the banks don't have their act together yet. The C says, here's the cancellation of debt, here's the amount that we canceled, and those are typically given in a short sale scenario.
Okay. So Gary, or Lon, I think you're in need of some serious time with a CPA, and my guess is Part B might even be a bankruptcy attorney if these numbers are big enough.
Well, can't do bankruptcy. Can't go that route. And
it sounds like your lender has given up trying to come after you for the money. So at this point, I think you need a qualified CPA or tax preparer. There's some enrolled agents out there as well that can do this. But the key is qualified. Most do not know these rules. Most have not dealt with it. So make sure you find someone who has.
And we'll give out. Yeah, we'll give out. Thank you very much, Lon. I appreciate it. We're going to take a break. We'll give out Donna's information at the end of the show too. So if you want to contact her, you're more than welcome to do that. She can help you or get you in the right direction as well. We've got to take another break here in just a minute. Let's see if we can get, maybe we can get one more. Let's see if we can get Gary in here real quick before the break. Gary, welcome to Talkin Money. How you doing?
Good. Hey, enjoying the show. Hey, I got a question for you. If you file a bankruptcy before the foreclosure, and of course you own you own your residence, and you've included the debt in the bankruptcy, so the debt ultimately is discharged in the bankruptcy. Are you saying that the cancellation of debt isn't going to be an issue because the debt was discharged in the bankruptcy and therefore it's not a taxable event? But did I hear you correctly say that the tax attributes for that deferred cancellation of debt will not reduce the basis in that real property? It can only go to other assets?
So, good example, Gary. And yes, you did hear me say that, but there's also some other moving parts to this. So, if the debt was concluded in the bankruptcy, you will qualify for excluding that cancellation debt as taxable income. But then you have to go through, because of bankruptcy, you have to go through the reduction of tax attributes. And there's a list of 7 or 8 of them. I can pull that out and read through them. It's quite dry and boring. But, NOLs carried forward, passive activity loss carried forward, AMT credits carried forward, foreign tax credits carried forward, all kinds of other things. Plus, one of them is to reduce the basis in the property. There is an ordering rule in which you have to go through these, and you can elect to change the order under certain circumstances. So again, it's something that you want to seek a professional to help you decide if it's going to impact you and how much.
Yeah.
So you could wind up with a reduction in your basis in that real property that could create a gain tax consequence is the issue. Is that right?
If it's your personal property and it was under bankruptcy, probably not. But you may have some other property that you have to reduce the basis for, another rental property or some other tax attribute that you could be surprised at.
But so what you're saying is if you didn't have other tax attributes, that would be at issue. If it was your residence, then that basis would not be reduced?
If it's your personal residence, has always been your personal residence, there's a good chance you won't have to do that.
That's an exception to the deferral.
The deferral, you mean taking it into income?
Yeah.
It's part of that calculation. And again, it's going with very general rules, so you'd want to make sure that your specific rules are looked at, your specific situation.
Hey, thank you very much.
All right, Gary. Yeah, that's really technical stuff. So we'll appreciate the calls, and we'll try to get a little more of that when we come back from the break, too. We got to take another quick break here real quick. Hey, I do invite you to check out my friends at the Hellwig Vineyards and Winery. Hellwig is, in fact, all of Amador Vintners are celebrating their history of winemaking, which starts next weekend, the 3rd and the 4th. Hellwig is kicking off that weekend with a celebration 5-course dinner by the Taste Restaurant in their underground caves, and all kinds of things going up there at the Hellwig Winery. Great place to go up and have lunch, hang out, do some wine tasting. Check out the Plymouth Wine Trail. You can check them all out at hellwigwinery.com. That's HELWIG, hellwigwinery.com. I encourage you to check them out. I'll be up there next weekend as well, so we'll have a good time up there. We'll be right back.